All right. Good afternoon, everybody, or good evening, everybody. I hope you're doing well. My name is Hans Augustin. I'm one of the business directors here in New Jersey. I'm actually going to share with you guys a presentation and information. If you got invited here tonight by a peer or another associate of mine's or associate on this team, we look forward to kind of making sure we can share some solid information about financial literacy. Let me actually pull up this PowerPoint so I can kind of make sure that you guys get a chance to learn tonight about some of the opportunities that I call the ultimate wealth building strategy. And hopefully, this will impact you to a point where you can understand some of the opportunities that exist. So, just to kind of give you guys a little bit of history about myself, I've actually been with this platform for about 24 months now. And one of the things that I did prior to being in this space was that I actually had a significant amount of experience in the real estate space. And as part of that experience, I began to understand the power of building wealth through real estate. And I think one of the things that I loved about the idea of that was that primarily when I got into that space is because I wanted to figure out how to create another form of cash flow and income. And then 24 months ago, through an opportunity of learning to use my experience as an entrepreneur and building a conversation of financial services, I begin to understand the power of an index universal life strategy. And I wanted to share with people how to leverage this opportunity to kind of understand what I call the ultimate wealth building strategy. So if you have the ability to take notes, please do so that you can get a chance to get connected to the information. But as a real estate agent that worked in the space, and as an investor who became very clear about the opportunities that can be created in cash flow, I was very much attracted to the idea of understanding how money works. And one of the reasons why I use that is because I quickly found out in the beginning conversations of leveraging the concept of money, there was only three forms of money available in America. And what that means is I quickly found out that if you understand how money works, most likely your first introduction to money is going to be tied to the idea that you're probably going to end up working at a job, part-time, full-time, and the very first form of money that you might get introduced to in America is called an income through a job. And then I also identified that the second form of money in America that's very important for people to understand is that you may have the ability to leverage a business to make a profit. And the second form of money is called a profit. That means as long as you have enough income, more than your actual expenses, the most common second form of money is called a profit. And the last form of money that my wife and I started to study a little bit more aggressively or become extremely clear about how we can really change was called wealth. So this conversation tonight is called about the ultimate wealth building strategy. And I want you guys to really understand how you're going to be able to leverage this for yourself. So the objective tonight is really to kind of give you guys what I call the pros and cons of positioning your wealth through real estate versus an index universal life, meaning that I've done it on the real estate side, but I want to show you how to consider an index universal life policy. I'm going to also share with you or answer some of these key questions. What are the challenges of real estate investing that I've learned? How does an index universal life potentially offer a better cash flow solution? And can an IUL even complement or replace real estate for a wealth building strategy? Because nothing is actually wrong with real estate. But what I begin to understand is that real estate works in a same idea that intentionally there's a strategy that you're trying to develop for yourself in that space. And essentially, the way that it really works is that people will purchase a piece of property with the intent to hold it for a period of time. And as they hold it for a period of time, essentially, the real reason why they're holding it is because they want to generate two things: rental income, which is the same idea as a cash flow, or they need to generate what they call appreciation. Appreciation is the same thing as equity. So that means they are going to find ways to purchase this property. And one of the ways that most people do it is that they're going to have to leverage some sort of a mortgage or a loan from somebody to expand their portfolio. Because the strategies that I use and many other people use today in real estate is the same concepts of either buying and holding that property to generate rental income, or they might find a property that needs to be fixed, and they call them ugly properties or maybe abandoned properties. But some of these ugly and abandoned properties live in the same neighborhoods that might be great, and somebody just needs to fix them so that you can create what they call appreciation. Appreciation says, hey, I bought this property for $100,000, but it's really worth $300,000. If I buy it for $100,000 and I improve it with another $50,000, $60,000, $75,000 in my of money, let's make it easy. Let's say I bought it for $100,000. I put $50,000 worth of improvements, put new windows, siding, if you can do it for that kind of a deal. But the house can be sold for $300,000. $150,000 worth of appreciation can show up. One of the strategies that I personally fell in love with in the wealth building concept of leveraging real estate was what I call short-term rentals, where people use platforms like Airbnb, VRBO, maybe the two most common ones that are being presented in America as a short-term rental site. But I used to rent and still rent many of my properties in that way to people to position themselves for vacations, to position themselves for business trips, or to position themselves for temporary trips. And you can make a per diem per day. But essentially, that's another form of rental income. Or some people may have a commercial location and they have a set of commercial properties and they rent it to business owners that are daycare owners or laundromat owners or dry clean owners, and they will rent that property to create rental income. So essentially, when I begin to study the concept of money, money and wealth, wealth is the concept that you can now position your money to make you more money. So the reason why I mentioned you guys the three forms of money in America is one is the ability to earn an income. That's number one, the ability to make a profit. But the most important one that I began to study was wealth. Wealth is the concept of how do I make money without me having to be 100% involved. And that's why I began to understand how real estate can work. But I understood one more thing in the real estate space. As you build, if you've ever done this before, or maybe you have a experience in real estate, you'll find that there's some common challenges and risks that most real estate investors or anybody that's involved in real estate may experience. And the top 1 to 6 challenges were tied to, hey, when I purchase a property, I have to leverage my own capital, which is not against the law, but it might have a high initial down payment tied to it, which means that your money is at risk in this deal, subject to how well you can learn to create the proper values. Values can be affected because there's what they call market volatility, where while property might be up for a period of time, depending on the neighborhood and location, you can potentially lose the value of the property over the course of time. And then tenants and maintenance issues became a reality. Some people, unfortunately, may be a great payer, but they may damage your property. Somebody may take care of your property, but they can end up being late or with their payments. And sometimes, depending on how bad the damage is, or the responsibility that may not have been created by the tenant, it just might be some maintenance issue that needs to be addressed. High cost repairs, plumbing, electrical. And then I understood liquidity. Liquidity is how quickly can I access my money in real estate. And many times it can be very easy and simple, but along the way you can run into challenges that says that the only two ways that you can access your money in this particular transaction is I either have to sell it or I now got to borrow more money. And then if you understand those realities, there's tax implications from a property tax challenge to capital gains, down to how you manage your time and some of the management responsibilities, even if you have an active property manager that's tied to the transaction. Now, because of what I understood, I begin to tell people that there is a way to understand how money works and where do you leverage it. One of the last pieces that got my attention was that although I've been in the mortgage business, I've helped people obtain mortgages, there's one thing that I became very clear about was the study of how money works so that I can position myself properly. What that means is I begin to quickly understand that there was two realities that I needed to understand about mortgage debt, which is the amount of interest volume that was tied to it, which means that this was money that was physically being handed over to the bank as I made a mortgage payment. Or if I had my money invested in this deal, what could I have done with that money somewhere else? Was there a lost opportunity that I was experiencing? And I begin to study the mortgage even deeper because the truth behind a mortgage says that regardless of the interest rate, now how small it is or how high it is, there is a factor that you need to understand. The amortization schedule of a mortgage tells you how much interest or money is being handed over to the bank legally. So that means even if you have a $300,000 mortgage and you have an interest rate of 5%, and you have a mortgage payment that represents that at a 5% interest rate on a $300,000 mortgage, you actually have a pretty comfortable payment at $1,610, not including taxes or insurance or other expenses that might be tied to a property. But when you begin to study this reality, here's what really happens. The truth of the matter is, if I pay a 30-year mortgage and I make this beautiful payment of $1,610 over a 30-year period, the bank will end up collecting $579,000, $767. That represents the $300,000 in principal plus $279,000 worth of interest paid to the bank. You'd be like, well, hey, Hans, that's fair. Maybe because that's what you've been told or what I got told. But I quickly began to, it doesn't really matter how long you're in a payment, the bank always wins. And what that means is that let's say I hold the bank deal for only 3 months. I can end up paying that $1,610, but $1,250 of that payment will go to interest that month. So that means even your first initial mortgage payments, you are traditionally paying 78% interest. Now, the reason why it got to my attention wasn't because you can't make money in real estate, you begin to understand how money works. Once you understand how money works, now you have the right to make a decision about where you want your money to be worked at, and is it worth your time and the leverage of the resources that you got to put into it. But now, when I begin to study the idea of an index universal life, which is an actual insurance contract that can be used in the form of developing income distribution. So what exactly is an IUL policy? It's actually a permanent life insurance policy, but it has this provision called cash value. And in that cash value, you can begin to accumulate money in that space, and you can earn interest leveraging the stock market performance. For example, stock market performance like the S&P 500, which is the top 500 companies in America. At that time or that period of time that those companies are in, they can leverage that indice to create interest payments into your cash value accumulation. And one thing that captured my attention was that I can create what we call a tax-free withdrawal in the form of loans. And that is a way that I can income distribute and cash flow just like a rental property. But what's unique about a property is that you got to find it, develop it, put it in position. But with a contract, it's a decision away for you to understand how to leverage cash value. Now, the older I got in age, the more I procured my time, the more I wanted to understand how to leverage money in all firms. I begin to understand that an index universal life could be a wealth building alternative because some of the key benefits started to mirror some of the things that I believe were important to me, which means that as I develop this contract, I have a form of a protection that means that I can have a death benefit that can be provided to my beneficiaries, in addition to the fact that I can create benefit appreciation, which means that the value of my policy can go up over time. I had what we call market participation that created the interest, but I can now develop what I call downside protection, which means that there's an upside to leveraging an index universal life in its interest, but there's a protection side called a zero floor. And one of the reasons why it got my attention even further was that this was something that was coded into the IRS rules. And if you look up tonight the IRS code 7702, you can leverage this wealth building alternative as a tax advantage account, and you can create wealth accumulation, which means that you can grow money in that environment and you can leverage it as a retirement planning tool. And as I begin to understand and study an index universal life policy, I begin to see the benefits of leveraging this as a wealth building alternative. So I sat down one day and I said, well, let's do a case study. In my traditional transaction of a real estate investment deal, which is nothing wrong with that, I begin to study how the money could work in comparison. So if I'm buying a property and I'm an investor, a traditional home buyer has larger benefits. But if I'm an investor of a transactional real estate deal, I might need to put anywhere from 20% down conservatively and maybe as high as 30%. And maybe every once in a while, there are some unique scenarios where somebody can capture a 15% opportunity. But if I'm buying a property in my high price state of New Jersey that averages somewhere between $300,000 to $500,000, 20% represents $100,000 of initial investment by me in order to capture the property, whether I borrowed it from somebody else or I used my own money. And then I got to leverage a mortgage or a debt instrument that happens to have a leak financially in it, which means that nothing's illegal about a mortgage loan, but the way that the amortization schedule says that the way that money works in that space is that, hey, there's a significant amount of interest per payment that is going over to. See, now, once you study money, you begin to understand that everything matters, because now, although I can make a rental income there, I still have an expense tied to the mortgage, the insurance, and some of that defeats how well and how quickly I can bring in cash flow. As I understood some of the market risk potential, the taxation responsibilities, and the liquidity challenges of a must sell of a property or refinancing my property, because those are the only two ways you can leverage money in this type of investment structure. And I begin to understand that these are realities. And although it's very true that if you're in a positive environment and you can leverage the growth of your the appreciation, you will make money over time. But when I looked at the wealth building alternative and index universal, I said, well, listen, if I took the same $100,000 and I leveraged it into an index universal life contract and I spread it over a period of time, but I didn't need to leverage a mortgage or another form of debt, but I can create what I call income distribution and growing the value of my cash while leveraging what the guarantees of a floor, which was put me in a position of no market loss, and create a tax-free withdrawal in the form of a cash loan withdrawal. I can position myself for a high liquidity, and I can position myself to do just as smart as any other banker or anybody that would extend my money while I'm creating appreciation. As I begin to understand the benefits, I realized that I can generate wealth leveraging a cash flow strategy that was in a tax-free environment, that was going to position it for no loss. I can leverage it just like real estate because I can use the money that I grew in that account as a form of a policy loan for investing or personal use. And I understood that I can create my own self-financing system, borrowing and leveraging the money instead of doing it with the bank. And then I can, in the future, make a decision to create a passive income source, converting my cash into a retirement income strategy. So I want you guys to begin to understand that as I studied this as an alternative, I begin to see the values of leveraging this as an option to create cash flow and to build my wealth. So I tell people, as you begin to have this conversation, I realized that I can overcome some of the challenges that we talked about, which was the challenges of how do I access my money very quickly? How do I reduce my risk with the challenges that I met with tenants, the potential damages, and the economic downturns that can change the evaluations of property? And then I realized some of the tax efficiency components that I could develop in an index universal life. And I wanted to create a long-term security for cash value, continued growth, just so that I can position myself. But I also realized one more important key that you need to be aware of an index universal life. And it's also true for a real estate property, but you have to structure it properly. In the estate planning conversation, you can automatically jump the conversation of probate in an insurance contract. But in some cases, depending on how a property is properly organized, if it's not tied to a trust in particular types of conversation, there could be a very much challenge where a judge or a court has to be involved in the final decision making. As I begin to understand the positive truth, I realized that with the understanding that I had in real estate and the understanding that I understand about how money works in a index universal life contract, what if I could combine these and make this the ultimate wealth strategy? What that means is that for those of you who may have experience working in real estate or being part of the real estate market, you don't have to walk away from what you do, but you can leverage the process of building wealth using both assets or using one or the other. But I understood the flexibility of an index universal life. I understand the challenges of a real estate deal, but what if I can do it together? Well, that means, what if you could use your IUL to fund your real estate investments? What if you can use your index universal life in the cash value section to protect yourself against some of the rental income challenges that you can run in when it comes to emergencies of dealing with your property and dealing with tenants and other challenges? How do you access the money quickly to make those decisions? I can build now a retirement fund alongside my real estate. And the whole idea that I talk about strategically with my family is positioning myself to create a strategy that helps me build a legacy. Because one of the things that an IUL has is a death benefit, because it's an insurance contract. That insurance contract can now position me to grow value and potentially cover early losses that I may be experiencing along the way as I build my portfolio of real estate. Let me give you guys a case study before we wrap up tonight. One of the reasons why I became very clear about the potential, this is a case study that I shared with a peer that says, hey, I have about $500,000. I'd like to strategically understand this strategy. How would you structure this conversation? I said, well, hey, essentially, what I can do is position in basic ideas. How do we distribute these funds over a period of time so that you can create a accumulation of your cash, position for you to access your money, but also position for you to create a death benefit if things happen early. So this represents a 35-year-old individual who says, I'd like to understand what my options are. I'd like to spread $500,000 over a 5-year picture so that I can grow the value of my cash and I can create not only a death protection, but access. Meaning that as the cash accumulates, there is a value that's being created over time. And if you look at after the 10th year, there's about $685,000 worth of money that's grown. And it also is accessible in the form of a policy loan. What that means is that if this gentleman needed $100,000 on his 8th year, there's a value of $567,000 worth of money that can be accessed in the form of a loan that does not create an immediate payment tied to it. And along the leveraging of those dollars, the value of his money continues to grow so that he can continue to do smart things. He says, well, Hans, you mentioned income distribution. I said, well, yes. How early would you need to access your cash in the form of income distribution? He said, what if I took this income distribution at age 53? I said, well, based on the policy values at that time, it would be worth 1.2 million in cash value, but it also represents that if you started drawing against this income, we can guarantee you a lifetime benefit of $106,000 of tax-free income. And so I tell people, when you begin to understand the power of how money works, and building wealth and leveraging access and position, you want to have a conversation about how this potentially can work for you so that you can marry the ideas of growing money, protecting your wealth, and positioning yourself for success. And I tell people, one of the people that we love having a conversation with is you. You don't need to be a real estate investor. You don't need to be a business owner. You don't need to be a high income earner. You don't need to be a retirement saver. You just need to be somebody who would like to talk about wealth and what their options are. But what we have noticed is that real estate investors have benefited a lot from this conversation because they're always looking for a way to create liquidity and more transactions. A business owner may be looking to increase their cash flow and leveraging a tax-free environment, and a high income earner saying, hey, what can I do with all the money that I'm making so that I can leverage wealth building activities? And if you're a retirement saver, maybe you've worked very hard all along your years to build up that IRA, that 401k, that 403b, and you want to understand what your options are. I tell people, let's have a conversation so that we can study how we can help you build wealth. As we do that, I tell people what we recommend is to get back to the individual who's invited you to this call so that we can sit down and have what we call a cash flow strategy. We can kind of help you understand how to get started. So what we're going to recommend is that you're going to schedule a strategy session so that we can discuss your financial goals. I want you to get back to the individual who's invited you to this call. I want you to make sure that you can make an appointment with one of the strategists that can help you walk you through this information. I hope this information has been very successful. This is really just a small snapshot of some of the things that we like to share with people across America so that they can begin to study wealth. If this makes sense to you, please get back to the individual who's invited you. And I'm going to open up the line to see if there's any questions from some of our participants tonight to see if we can answer anything before we wrap up. But the call is open if there are any questions among us, basically. But welcome to the call, everyone. All right.
Thank you for the
Is this part of
information,
just a
Hans.
specified pitch that you give? Or is it if somebody's specifically asked for it, that they want to get into the IUL?
I'm sorry, Mr. Nick, go ahead and repeat that question. I think I have my volume down.
Oh, I'm sorry. I was asking, is this a pitch that you do on like every presentation you get with a new client? Or is this something that you do if they ask for it, or you kind of point them to it?
Yeah, this might be more built for, it's not a pitch that I share with every client. It's just that having had a lot of people who might be high income earners or people who might have more real estate driven goals or people that are small business owners, that might be a way for you to have a conversation because you'll have people that mention to you that sometimes they're looking for alternatives. So this is a way that I've learned to leverage having this conversation with anybody who's trying to understand what their options. Having been in the real estate world, this is one of the conversations I can use. An index universal life contract can be used for almost anything. It just might be simply for protection. It might be simply for a way for somebody to grow cash. But a lot of small business owners and real estate people can be very much attractive because they're looking for access to their cash over the course of time in the event of an emergency. And they're also looking for a place to kind of protect their growth in an environment that has a couple of benefits. And an index universal life benefit says, hey, I got the insurance side. I got the potential growth of cash in this account, in addition to the fact that I can create some access. And for someone like myself, who's done a lot of real estate, accessing cash can become very important, whether it's just a maintenance emergency down to replacing a roof, down to doing another deal. And this is one way that you can have that conversation with people that have these particular needs, Mr. Jenkins.
Okay, thank you.
All right. I think somebody else, I think Miss Ida had a question, I believe.
No, I was just thanking you for the presentation.
Well, I appreciate it, actually. So I hope this was fruitful for you guys. This is a great place for anybody who would like to make sure that their peers can hear information, whether they're a small business owner, investor, or just an individual just trying to understand the possibilities of how to build wealth. Please invite them. There'll be a call like this every Thursday around this same time with the intent to share this information. But if there was somebody that invited you tonight to this call, go ahead and get back to them so that we can reach out and set up a session. And I appreciate you guys. You have a great evening, and I'll see you guys next Thursday at the same time. Thank you.
Thanks, Hans.
All right.